Hex is looking good for a 10x in the very near future. And today is part 2 of our 2-part series. In part 1, we covered the current position, but today we're going to look at where is the likely price action to go based on the buying and selling behavior of the people participating using Elliott waves and Fibonacci. The best ways to read the market like a pro in an objective, non-emotional, mechanical way, giving you the edge. So you're 2 steps ahead of the market as opposed to 2 steps behind. If you like today's content, like, subscribe, hit the bell notification. My name is Jiggy. I'm the award-winning author of The Extraordinary Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on crypto. So let's dive straight in. All right, so the chart action, the price action, what we covered in the part 1 is a nice move to the upside, wave 1, and we said is looking like a nice wave A, B, C of a wave 2. We went into some detail because there was particular patterns within the patterns that says, okay, we are anticipating that this is a high probability wave 2 zone. So what we want to do, and if you want the details of that, just watch part 1 of this Hex video. But what we're going to focus on next is, so we got this zone over here. We're saying this is the high probability zone. What we're going to look at now is where is it likely to go. So we've got a high probability setup on our hands. There's a lot of things that are coming together, mainly the 3 things of momentum, pattern on multiple degrees, and price on multiple degrees. And by the way, if you want to learn the key secrets, the 3 key rules that you must know on how to apply Elliott waves, take my free Elliott Wave Masterclass is in the link below. I break everything down in a lot of detail, so this becomes more and more familiar because everything in life is difficult before it's easy. And when you're practicing, then it flips around and it becomes easy. So let's go into what we're going to cover today, which is wave 3. We're going to look at wave 3. We'll keep it really, really simple, right? Because once you've identified something and you go, okay, this is looking healthy, I see the pattern, I like it, it's meeting my criteria, where is it likely to go? So I'm just gonna show you this. So what most people don't realize is that the markets tend to move in 5s and 3s. And after a 5-wave sequence and a 3-wave correction, sometimes it's more in terms of it can be a complex correction, but most typical is a 3-wave correction. When you see that, as clear as this, what tends to happen is the market then expands to the next wave cycle. And after a wave 2 comes a wave 3. And a wave 3 is the most, more often than not, explosive movement that you'll see in most markets, So also to keep in mind, and I want to draw this because this is important. Most people don't realize this. A wave 2 is profit taking, but it's really a retest. This is a retest of the wave 1 low. So it's an extreme correction, typically between 50 and 78.6%. But if the correction holds, if this wave 2 holds, what it does is it creates like a launch pad, like a platform for wave 3 to take off. This is the wave where you're gonna make. If you manage to ride it, if you manage to get in at the low and get out at the top, it can be one of the most powerful waves. So what we want to do now is know the relationship between wave 1 and wave 3. Wave 1 and wave 3, one of the key relationships. And there's a simple tool that I'm going to show you today that's going to give you because even if you got in, most people don't know when to sell. Like, in other words, you would have seen these patterns over here. Even people that bought, let's say, down here would have seen the price go up here, and the majority would not have sold and are now holding down here, which has pros and cons. Depends on if you're locked in the staking. There's lots of things happening. If you did it deliberately, as in that's your part of your plan, it's more the 10-year vision or the 5-year vision for Hex, or you might just be riding the waves. So whatever's suitable for you, but it's good to know what's likely to occur next so you can make the decisions based on that behavior. So what we're going to do now is we're going to measure this wave 3. We're going to multiply it by particular key ratios. I'm going to tell you which ratios, and we're going to get a projection into the future of what's likely to occur with high probability. So we have a price zone. And this is the reason I said 10x for Hex is likely, and you're going to see exactly why. Because there's 2 key ratios that you need to know for wave 3. So let's just first do this tool. There's a tool over here called Trend-Based Fib Extensions. We are going to do it to the side over here to keep it a bit cleaner. We're going to measure the low of wave 1, the high of wave 1, You need 3 clicks for this. And we are forecasting the wave 2 zone. So we're going to have a zone to say wave 2 is likely, if it holds, going to go down to here. And the key ratios that we want is 1.618 and 2.618. Now, 1.618 is actually the most common for a wave 3. And it should be the minimum expectation if a wave 3 takes off, right? 1.618. Well, this is crypto. And in crypto, what tends to happen is we tend to get over-exaggerated waves. We tend to get FOMO, fear of missing out, buying. So it's panic buying. And you'll tend to see wave 3s and sometimes wave 5s overextend. If that's the case, the overextension number that you want to be aware of is 2.618. And that price range is around $1.40, close to that range. And today's price is around 14 cents. And we are potentially going to have one more lower low, and it might even go as low as 10 cents. So it might be 10 to 15x by the time it goes lower. But in this zone is give or take 10x. If it did the 1.618, it's more of a 6-7x. But these are the two price ranges. There's a couple of other things that we can do. More often than not, there's something called an external retracement. By the way, I cover all of this in a lot of detail in my free masterclass, where I show you how to combine the 3 key Elliott wave rules that you must know with powerful Fibonacci psychological ratios, the relationship between the waves in the free masterclass. And it allows you to see this time and time again. And around 50, 60% of the time, these patterns are relatively obvious. And when they are, we want to use that information. So now let's just do the external retracement. So again, I cover the external retracement. I won't go into too much detail on the how right now, but the key ratios is 1.618 and 2.618. So now we've got these zones, these clear zones, and I like to draw just like this. So we know, and what tends to happen more often than not is if the price action does get to the first zone and then passes it, it will tend to just gravitate to the next zone. And if it goes past this zone, then that's when you want to know it's overhyped, it's overvalued, it's over euphoria, it's too much euphoria, and then a big wave 4 correction will tend to follow. So we want to be aware of that buying and selling behavior. As a bonus, I want to just do one more thing for you, and then we'll wrap up. There's a thing that's quite powerful called Fibonacci Time. I'm looking to potentially create a new course on this. And we can measure how long did it take wave 1 to form. We can take it from here and project that forward. And what this does for me is it tells me if a wave 3 did take off, how long would it take to form? So give or take, we're talking maybe 3-4 months. So it's not like an overnight wave 3. It might be less, especially if other markets really take off. And the other ratio is 62%, so we want to be aware of that. So it gives us a nice zone. I'm going to just change this to a bit thicker, and then we also change it to dashed. There we go. So now it just tells us, and then I would literally do this for myself. I'm a visual guy, so I like to have these visuals. So I go, okay, this is the typical price and time zones that I'm looking for. So now we've got, so we did this in 2 parts, right? Part 1, we said, where's the high probability end of this downward trend? And it looks like we're close, especially now the weekly momentum is up. We covered that in part 1. And then these are the 2 price zones and time zones that we should be anticipating in the range of 78 to 88 cents, which is around 5-6x, maybe 7x. And then between $1.20 to around $1.40. Doesn't mean it's going to stick to those. It means it gives us a reference and a guideline on what's likely to occur next. So if you'd like to learn this in detail, join my private Telegram community, join my weekend workshops where you get to have access to me. Because one of the reasons I'm covering Hex is one of my students was asking me about Hex, and we got a workshop later on today, and I wanted to just cover it in a bit more depth because, I've been doing this for nearly 15 years, and these patterns become relatively obvious once you've been doing it for a while. You'll see them in advance. So in my masterclass, if you click in the link below, what you'll see is, well, there'll be 2 pages actually. I just think I just closed the other page. Let me just open it back up. Let's have a look if it opens back up. Yeah, you'll see this page, free Elliott Wave and Fibonacci Masterclass. You'll get immediate access. Just register. I think you just need to put in your name. Yeah, your name and your email. Bang, you'll get immediate access, and you'll get some of my top secrets that has taken me over a decade to really master, but it applies incredibly well to crypto, blockchain, technology, whether it's a utility token, whether it's different types of tokens, it doesn't matter. When there's buying and selling behavior and there's participants and volume that are betting on the price, what we're doing is we're measuring the psychology and the psychological mood of the feeling of the price action. And when it's overvalued, when it's likely to come down, and when it's undervalued, it's likely to go up. And that's how we do it. We keep it really simple. So let's finish on a quote. We're going to finish on one of my favorites. Oh no, this is a different one. I like this one as well. I thought it was a different one. Today's one is Warren Buffett. Just a reminder, good reminder. Rule number 1, never lose money. Rule number 2, never forget. Rule number 1. Keep things simple. What we're looking for is the edge, and then to trade that edge and use that edge consistently in our favor. And the 3 things that we're using, and you'll learn this in the masterclass, is momentum, pattern, and price. And when the 3 coincide, that gives us a massive edge where we become the casino. And if done consistently over time, we're talking about a long time, then you'll increase the rate of winning. So like, subscribe, hit the bell notification, and I'll see you soon.